Before I start this video, I want to do a couple of things. I want to ask that you rewind it and make sure that you read the disclaimer. Going to be very important for this video. This is not to be construed as financial advice or for any other usage other than me doing a technical breakdown of something that I am seeing on this chart. And based on what I say here, that could cause some panic. Second thing I'd like you to do is, as soon as you get started, just go ahead and hit the like button. Give me the like first. This is going to be an amazing breakdown, I promise you. So go ahead and give me the like button. Let the algorithm know that people need to get over here and see this. They need to see it as soon as possible. That being said, we're going to break down currently what's happening with SPY and make a projection on it and talk about some combined elements which make me feel strongly about this projection. So that being said, I'm looking at SPY on the day chart. This is all we really need for this right here. We're actually going to jump back to the week because there's going to be another indication on what I think that we're seeing. So starting from this high up here, this area right here, starting from this high right here, if I grab our Fibonacci retracement tool and come down to the low, so swing high to swing low, right here, right about here. I just want this one to be real clean, and you can see that is the correction back up. So from the high to the low, the correction back up reaches a 50% retracement. That's this guy right here in the middle, okay? So that's the correction back up. That's the correction back up, okay? 50% retracement up. And this would be the beginning of our bat pattern criteria. This is the X to A move. This is a valid B leg here, which the minimum requirement is that it must touch the 50%. And this will be our C leg down here. As long as it's like at least a 382 retracement is okay. The same time we were identifying the valid B leg, we brought on the 886 retracement for the valid D leg and the completion of the pattern. So it pains me to say, if people had been struggling with SPY last week, especially retail traders constantly trying to get long and do all the little things that they like to do, that probably wasn't working out too well. And at least now you know why. This pattern does have a pretty high success rate. So it's not something that you want to get caught up in. So you didn't fill here. He doesn't fill the pattern until right here. And then you see the reaction on it, okay? So typically what'll happen, I just want to take the 50% off of there. What'll happen is you'll get targets in the form of a retracement from the A to D leg, or the completion up here, to talk about how much the retracement or correction could be on the way down. So with me starting from A to D, if I can just get real accurate with it, and just bring on basically a 2 target setup. Still going to do that, even though I feel a little bit stronger about the second target, meaning the 618 retracement. Basically the 382 retracement will be target 1. And again, this doesn't mean for anyone to go and jump on their platform, jump on their terminals and go short SPY, because if I'm wrong, which I hope that I'm wrong, but if I'm wrong, you're going to get destroyed. If you try to short SPY and this is everything that I say is wrong and SPY goes against you and go up, you're going to get destroyed. But in this faction right here, you already see it reacting. Of course, the 618 will be the target 2, which is the target that I'm a little bit more interested in. For if a trader had known that to start shorting this at the 604 mark, this trade would have looked like this, basically with stops right above the X leg and a target down here at the 618 retracement. So that's what a full trade would have looked like on it. Let me actually clean that up a little bit more, and then we're going to approach it from a completely different direction. So that's basically what's on the table technically. However, we need to Oh, a couple of other things, a couple of other filters that was helping bring this through is if you notice way back here, way back in May, the SPY was already, even though it looked like price action was continuing to move up from, well, it's at 594, making it all the way up to 604. It looked like that was going up, but there was divergence. This had already been weakening since May. And mind you, we're almost in July, so you can see the bearish divergence, and it's actually pretty strong, pretty good bearish divergence. So chart printing up, but RSI printing slowing down. Remember that the RSI is a speed indicator, momentum indicator. I'm wondering if I would want to bring on volume. I don't really think I need to do volume, but I will, just for the sake of what we're doing, just to see what it looks like, just to see what the volume looks like. Yeah, so a lot of bearish volume, a lot more than we would like to see. And we're on the day, so that was 3 straight days of bearish volume. And it's pretty high. It's spiking pretty high. It means it's pretty strong. So we'll go ahead and leave that there because it's significant enough for us to keep on there. So many things lining up with a completed pattern being overbought with bearish divergence and bearish volume, a lot of it too. So again, I wanted to back up to the weekly chart, and I know the pattern is there, but I'm probably going to have to clean everything up, and then I'll put some stuff back. I need us to be able to see as I write this up. And then this right now, this part will allow us to use the 3-bar reversal. So I backed up from the day to the week because that's where I actually, looking at it, I identified the bad pattern on the weekly chart. Then I went to the day to really see it a lot more clear. But unfortunately, there is bullish engulfing candle. There's bullish engulfing candle right here, followed by, and it's red too, in the red bias, followed by doji. I think I can get cleaner than that. Followed by doji, and it trust me, I'm getting no joy out of making this video. Followed by a candle closing below the doji, completing the 3-bar reversal. So not only do we have the advanced pattern that was filled, we also have the 3-bar reversal in play. And then, as you guys, if you can recall, targets would basically be the same thing if I grab the Fibonacci retracement. A correction on this whole entire leg here, okay? A correction on that leg to the degree of about 61.8% before there's any relief on it. And again, I really hope that I'm wrong. So grabbing the Fibonacci retracement tool and going to the low, from the low to the high, and looking at the 618 retracement, then we are again in something like this, because the market's going to open up here. I don't know if it's going to gap up or down, but this unfortunately, I don't think there's anything that we can do about it now. It's in play now. To the degree that it will correct down 61%, I can't say that for sure. But that there will be that there are some decisions that have to be made. Yeah. Also, I will say that that would be pretty significant. That drop would be pretty significant, but it'd be down to 528. And then if that did happen, you could see the market, either rally or rally out of that, or start to dance around, hang in that zone, maybe even fully recover from it. Who knows? Play around there. We don't know. Oh, okay, at that part. But nevertheless, unfortunately, I do have to put. When the market opens Monday, we're going to be somewhere in that zone. We can only hope for the best. And then just grabbing the long short tool and saying that we, going to be entering somewhere in that range, with stops right above the previous highs, right around that 605 area. And then targets down to 528. All right. So this is kind of like what I believe technically that we're in for. So pretty clean chart, pretty clean setup. And again, so now I guess I could come back and say, yeah, this is all being kind of driven off this. Well, the 3-bar reverse, we're using the 3-bar reversal in combination with the with the bat pattern. So those things all together. So it's combining them. So it's strengthening the case. That's what I don't like. These are strategies that I'm adding. I'm making it to where I won't even enter my advanced patterns without confirmation via a 3-bar reversal. And I didn't know that when I was thinking about that I would run into this nightmare here, because we want the markets to do well. We want stability. We want to be able to buy. We want prosperity. And lately it's just been very hard with just different political climates and things like that for us to get there and keep it and achieve it. So, like I said, this doesn't bring me any joy to come out and it takes a lot of balls and a lot of nuts too to come out and make this type of projection. I've done other videos on SPY, but I usually am able to stay away from doom and gloom, and it's usually on a more positive note that I'm doing videos like this, positive projections and things like that. But unfortunately, this is where I landed when I went to go look at the SPY today. So if you like this video, give it a thumbs up. I know this one is going to make people feel kind of way. Leave your questions and comments. I have no problem with it. Most of the things have already been said in here. Subscribe to the channel if you're not subscribed. And if you'd like to understand more about all these different techniques that you saw me doing, advanced pattern recognition, different patterns like 3-bar reversal, using trading view tools, Fibonacci, advanced Fibonacci, indicators like RSI, all that stuff is free on the house at the Harmonic Trading Academy playlist. So head over to the Harmonic Trading Club, go to the playlist section and go to the Harmonic Trading Academy. I think we got close to 30 classes in there now, teaching all of this stuff in depth, in detail, step by step. No cost, free on the house, no mentors, no gurus, no payments, no monthlies, no discords, no none of that. Everything that you saw me do here is on the house, taught free, if this is something that interests you. So you guys take care of yourself, be safe in the market, and I'll see you in the next video.